So recently I asked you, hey, ask me anything. What questions you have? I'll do my best to make a video and answer as many questions as I possibly can. And that's what we're going to do today. So ask me anything. And this is pretty much live. It's going to be unscripted. I'm not editing it. I'm hitting record. I'm going through kind of like a live stream to give you my thoughts and answer your questions the best I can. Now it says ask me anything. So technically, what is the favorite country you've traveled to and why? That's a tough one. I mean, 70 plus countries. I really like Southeast Asia a lot. Like, for example, Thailand. I really enjoyed Cambodia, Laos, Vietnam, parts of South America. There's a lot of places I haven't been, but this is a very difficult question. It depends on my mood and what I'm trying to get out of the experience. Each vacation has a different purpose. Like if I'm going to Hawaii, it's different than if I'm going to, Cancun to an all-inclusive resort or something like that. Next question is stock related. Have you lost or losing conviction in any stocks you own? Now, this is a good question. And of course, I think it's natural for us as humans when the market goes down or a stock goes down, you lose conviction because the stock price drives the conviction. And one thing that I always said in 2022 is don't let the price of the stock be the only reason that you sell something. In other words, just because the pin action of the stock could be down. Some of the biggest winners I've had over 25 years of investing at some point were red in the portfolio. Even NVIDIA at one point was red in my portfolio before, of course, exploded to crazy levels that you might not have anticipated just a few years ago. So yeah, I mean, I've lost conviction on stocks I own. For example, I had some Etsy. It's kind of a speculative play, and I've lost conviction as someone who actually bought the things that you see in the studio here. So all the stuff back there had custom signs made, all of that. I went to Etsy, and long story short, they thought that it was like fraudulent activity because I was buying so much stuff, and they suspended my account. And so I went to Amazon, and I was able to find a lot of the same buyers or sellers, excuse me. I was able to find a lot of the same sellers and buy the same things for lower prices and free shipping. And so at one point, I never thought that Etsy had a moat necessarily, but I thought it had sort of a niche in e-commerce, and I like that niche part of it. The thing is Amazon, even Shopify, others, as they get more in that space, and you see a lot of the bigger sellers working across platforms, well, it's not nearly as interesting. And the fact that it has been kicked out of the S&P 500, of course, sentiment is already bad and gets worse. That's one just quick example of a stock that I owned that I lost conviction in, and the story has changed, right? Have you getting more thought about adopting a dog? My kids do want a dog very badly. It's tough because if you travel, we want to go on vacations. Like my family just went to Hawaii. It's really hard because you have to have somewhere for the dog. But I grew up with dogs, and it's a tough question. Your prediction on how many top 10 stocks will be in your portfolio in 10 years? Hopefully, if I look at my top 10, hopefully all 10 are. But at the same time, we know that we are not perfect, that we're going to make the mistakes, that we're not going to be right every time. Peter Lynch says if he's right 6 out of 10 times, it's a favorable result. So the list of stocks, the top stocks, how many do I think will be in my portfolio in 10 years? Well, that is a constantly evolving thing. If you look at my top positions, I have stocks like Microsoft and Amazon and a lot of these mega cap tech names, but I owned them for a decade plus. Microsoft was a 2012 buy. I've had NVIDIA in there. That's a top holding since 2017. It's hard to say, but how many stocks? Hopefully all of them. If the story changes, you sell. Most of what's in that top, 70%, 60, 70% of the portfolio is simply profits. And so you're really sitting on a lot of profits, and you kind of take profits as stories change and things like that. That's a rabbit hole we could go down, talk about spec stocks. It's very misunderstood on YouTube. We'll see if a question like that comes up, and I'll go deeper on that topic. Top 10 stocks that will be in your endgame portfolio. I don't know the answer to that question because I haven't created the endgame portfolio. There is a video, Masterclass 13, that gives you an idea. It's hypothetical, but I don't know because I'm not even exactly sure when I'm going to do my endgame at this point. I know it's going to be, I have a general plan, but it is a flexible plan at this point over the next 5 and 10 years. And that's because of Fired Up Wealth and other things. A piece of advice you'd give to a young investor, one of the biggest things I would say, if you're a new investor invest in ETFs like the S&P 500 and learn as much as you can before you dive into individual stocks, especially spec stocks, ones that are very expensive, high price to sales multiples, burning cash, the meme stocks, things like that. Be careful with those. A lot of people, they download a Robinhood app, they buy 10 stocks and say it's a portfolio, don't really have a plan, don't have a structure, don't have a blueprint. So I can't give financial advice, but my tip would be to invest in ETFs and learn as much as you possibly can before you dive into individual stocks, especially the riskier names. I know that nobody does that, but you're asking me a question. I'm giving you a brutally honest answer. I'm going to be as transparent as I can here. I'm not editing. I'm not going through and saying I shouldn't have said that. I'm treating this as a live stream. Would you rather have dinner with Warren Buffett, or receive $500,000 in cash? That's a really good question. And I think it'd be great to have dinner with Buffett, but I would take the $500,000. Some people might be surprised that answer either way, but $500,000, that's still quite a bit of money. It depends on that number. Put it this way. Would you say, hey, would you pay $500,000 to have dinner with Buffett? My answer would probably be no. 20,000, 50,000, probably. I don't think I'd pay a $500,000. I'm not a billionaire where $500,000 is insignificant to me. If if you could have a drink with only one living CEO, who would that be? Man, you're really asking some tough questions here. Now, this is in Discord, by the way. This is in Discord in the Elite Chit Chat. We have a free trial to this, so you can try out 7-day free trial. Go to patreon.com/fired up wealth and check it out if you're interested. Just throwing it out there in case you are interested. That's a really tough question, Finn. I think it would probably have to be Elon Musk, just because he's such an interesting guy. There are a lot of CEOs. Jensen Huang would probably it'd be a tough one. In fact, I might have to flip a coin. I think most people would say, what's Eric going to answer? And he'd say Jensen Huang. I think depends on the day you ask me. Jensen Huang, probably, if you ask me tomorrow, I'd say that. Because of the news today, the market, ripping, Tesla up 13%. A lot of with the election, we won't go into any of that and cause any drama, but the facts are the facts. The Tesla stock's ripping. His homeboys basically with Trump. You look at EVs are selling off except for Tesla. And there's a reason, obviously, for that, because those two are very close, and that's probably going to make someone mad just because I said that, but I'm just telling you a fact of why the stock is higher. It impacts your investment portfolio. But it'd be one of those two. It'd be a toss-up. Today, because of this specific situation, the presidential election just got announced this morning, and it's a couple hours ago since that officially happened, basically, and here I am doing a live stream. Musk or Jensen, I'd probably go with Musk today, but that answer might be different tomorrow. Is there a stock you have high conviction you believe safe and deliver a 15% annual return over the next 5 years? Or do you despise questions like that? 1000% despise questions like that. But, hey, I ask the question. Ask me anything. You ask me a question, I'm going to do my best to give you an answer. I think the answer to that question is nobody has a crystal ball. If you look at high conviction, the word safe is it's a slippery slope. Nothing is really that safe. People want answers like this, like, hey, tell me what stocks to buy. I'm going to hold them for 10 years and I'm going to give 15% return. It's not as simple as that. Obviously, every time we buy a stock, we have the intent that it's going to go higher, right? But to answer your question, I have a top 25 high conviction stock list on Patreon. And those stocks you talk about, like the mega cap tech names and a lot of the high quality names that are on that list, those would be what I'd consider safe. Can I guarantee a 15% annual return over 5 years? Nobody can. We don't know what the market's going to do. I mean, you could go into a recession a year from now and have a 3-year bear market. So first of all, I would say this: 5 years is too short of a time frame. If you only have 5 years, you're probably towards endgame and you need to be more conservative. You're not investing in growth stocks. Some people, depending on the person, they might even be in bonds, but not to go too deep on this right now, but 5 years is not a long enough time period. You need at least 10, preferably 15, maybe 20 years, something like that. Trying to predict an annual return of 5 years, that can get you into a lot of trouble. But some of those high quality names, those mega cap tech names, I think that they'll be around in 5 years and they'll give you returns. There's no way to know it's exactly a 15% compound annual growth rate over 5 years. That's just anybody that tells you that they can predict that, you should, be very careful about believing what that person has to say because they're probably full of it, right? Maybe you should actually get a crystal ball and bust it out in one of your videos for theatrics. Not a bad idea. I should look into a prop. When doing DD on a stock you're interested in, what's the first few things you look at sites for reliable information? The first thing I always do is I go to the investor relations page. I'll dive into investor decks, but I usually would go to the annual reports, the 10Ks, the 10Qs. I also like to use sites like Seeking Alpha. Seeking Alpha, all those different tools are just tools in the tool belt. But if you want the data, you want to get them from the financial statements. Like if you're reading Seeking Alpha, for example, most of the articles are opinion articles, and it's. Yeah, I'm not trying to take anything away from Seeking. I'm just saying, like, some people that have been writing on there, they've been investing 20 years. Some of them just started a couple years ago. There's lots of different opinions and levels of expertise. So they're all just ideas, and you have to take those ideas with a grain of salt, and you have to go out and make your own thesis before you buy something. But I do like to look at Seeking Alpha for things like the metrics, just a quick glance of the profitability metrics, the valuation metrics, and so on. I also like to go to Fidelity. There's lots of different tools in Fidelity that I like to use, but primarily the first thing I'll do is go to investor relations page of the company, and I'll dive into those financial reports. The annual reports, the 10Qs, the 10Ks, the filings, those give you a lot of information about the company. They're very long. Also, you want to go obviously in the earnings reports. You can listen to earnings reports, or on Seeking Alpha, what's nice is you get transcripts and you can kind of read through those versus having to listen to an hour podcast. Uh, which if you're just doing it from a high level, it's a great way to kind of dip your toe, so to speak. I won't answer them all. I'll cherry pick. I've answered them all. Should U.S. stock investors be concerned about the roughly $35 trillion national U.S. debt, and why? Or is it business as usual? I think it's a huge concern. I don't have an answer, and we could spend an hour on the topic. But yeah, it's a big concern. But what do we do? I mean, putting it in cash isn't going to save us. A lot of people will say put it into crypto. Maybe, maybe not. Gold bullion. Um, be one of those preppers and move to the hills and bury all your gold bullion underneath your hut underground, or I don't know. Uh, well, there's notes about chart day. That's not. I don't think he's asked me about that. Um, so okay, Laura says as interest rates lower with money market funds, where would you recommend parking your cash? So where I have my cash, most of my cash is just in my Fidelity account and a sweeping account, and I have it in basically an account. I can't remember the ticker off the top of my head, but it gives me tax free. It gives me a tax free interest rate return on it. And so it's a sweeping fund where I can use it to buy a stock at any time, but it still gives me a return in cash. Obviously, there's other things you look at like money markets, and there's CDs, and there's bonds. There's lots of different things that you can look at. About parking cash, government. You have to be careful. You never know what you're going to get in these chats sometimes, but um, we kind of lost order here. So I think that's pretty much it. I think we've started going a different direction with some of this stuff. I'm going to head over to YouTube next, and I'll answer some of the questions from there. All right, next I'm going to go through the Ask Me Anything in the community tab on YouTube. Now, if you go, I'm on a computer right now, I'm on a Mac. And if you're on a Mac or if you're on a computer, it should be like this. You can go under community and it'll open up this tab. A lot of people don't know about this. It's really good because there's great updates and things that we post on here. But I asked the same thing. I'm going to do something new for a video. Ask me anything below. So I haven't looked at these at all yet. I'm going to go through them, answer the questions the best I can. Hopefully they're all good questions. What type of investment would you suggest for a toddler? Yes, a toddler. I started investing the day my daughters were born in a custodial account, UTMA. Generally ETFs like that are good. The VU, the VTI. I also do individual stocks, and now there's 6 and 9. So I'll say, hey, this month we're going to buy a stock. I also match. So if they get $50 for their birthday, they give me $50. I'll give them $100 that they can invest. So I've been doing that with my kids for 6 and 9 years, and now they actually pick. I'll give them 3 or 4 different stocks to choose from. They'll ask me some questions, and they get to choose the stock. So I give them a starting point, like 3 or 4 stocks that I think would be decent for them, and then they get to pick their own stocks. So they have their own portfolios, and they're involved in the process. I show them their Every quarter we go through and I talk about how their stocks are performing and things like that. Just kind of talk through it and keep them involved in the process. And it's a lot of fun for them and it's a lot of fun for me. So I would recommend doing something like that for your little ones. And as they get older, get more involved in that process. What are your top picks for football season, college and NFL? I'll be honest with you, I played college football, but I have not really watched college football in recent years. On Saturdays with kids now, we've got all kinds of different events. And unfortunately, I don't make the time to invest to watch both college and NFL. I love college football, just haven't had it as much time for it. NFL wise, it's tough. I mean, a lot of the teams that you think are going to be really good haven't been looking as good this year. So it's hard to say. I am a Falcons fan. We've never won a Super Bowl. And, it's tough being a loyal fan. I'm not one of those bandwagon jumpers, and I've been very loyal for 25 years or whatever it is now. Over that, actually, about 30, 35 years. So a long, long time as a Falcons fan with a lot of disappointment. They have a decent team, but are they going to the Super Bowl? I mean, there's always a chance, but yeah, probably not. So who's going to win? It's tough to say. I think the Ravens on paper look really good, haven't really performed to expectations, and look at like the Dolphins and so on. So anyway, what do you think about the HIMS drop in long term prospect? HIMS is a meme stock. I'm not trying to offend you by saying that. Tesla's a meme stock, Palantir's a meme stock, SoFi is a meme stock. HIMS is a meme stock. It's something. The fact that I get that question, I think multiple times on YouTube here, it kind of speaks to the fact that retail investors are into it. If you look at the definition of what a meme stock is, right? Let's just do it together because people don't, believe me. What's a meme stock? And of course, there are different definitions for this. Okay, a meme stock refers to the shares of a company that have gained viral popularity due to heightened social sentiment. And generally speaking, it'll talk about social media as well. So, there's different definitions. Right here, heavily influenced by social media. Okay, so if we're on YouTube right now and we're talking about a stock, it's influenced by social media and it is a meme stock. It's not saying that it can't be a good company, that it can't make you money, but it should bring awareness that these type of stocks can go a lot higher than you think they will, and they could go a lot lower than they think you will. Long-term prospect, I've never talked about the stock. I've been asked by lots of different viewers. I know it's very popular on YouTube and social media. I personally don't understand it myself. It's not part of my blueprint. It doesn't mean that it shouldn't be an investment for you. I'm just being completely transparent here because that's what I do, right? I'm just telling you how I feel. I'm just speaking what comes to my mind as you ask the question. Long-term prospect, hard to say. I mean, how does it compete against something like Amazon as it gets more into that space? Maybe you have a better answer than I do. I don't have a good answer for that. Eric, it'd be great if you make videos going through financial statements. We have a masterclass series that does that. This isn't to make anybody upset either, but YouTube, the majority of people watching YouTube are very casual investors. They're not necessarily investing aliens. So you might stumble across this video and you're probably already bored because we're talking about stuff and you want to just know what stocks to buy now. Boom, boom, boom. Fast forward, you're probably on 2x speed jumping around. That's just the reality of YouTube. It took me a while to accept that, but that's just what it is. The investing aliens that really want to learn, we've got the Patreon, Discord, and that's a place where you can go and learn about things like financial statements. I could do a video like that on YouTube and it would absolutely bomb. It would get no views. And I used to do stuff like that all the time. And it made me depressed. So I decided that I'm not going to do it anymore because it's not good for my mental health to make videos that bomb. And that is a topic that would 100% with certainty bomb because very few people are interested in actually learning how to be an investor. They just want to come to the channel to say, hey, what stock should I buy now? And that's generally which videos do well on YouTube. Even to make this video today, the chances of this doing well and getting the algorithm are pretty low, but I'm doing it anyway. HIMS drop analysis. There you go. I mean, that should tell you a lot. Out of 3 comments, 2 of them are asking about HIMS. I'm just saying, I'm just bringing awareness. That's all I'm doing. SoFi earnings, 13% later, 6% the next day, and explanations. The explanation is that it's a meme stock. It's heavily traded. I own SoFi and I'm bullish. I did trim some recently, but this is a trader type name. It's a retail type name. It's a meme stock. It's not all meme stocks are created equal. So SoFi is not the same as Palantir. Palantir is not the same as GameStop, but they are all technically classified as meme stocks. There's a wide range of volume dial for those types of stocks, but these types of stocks will have huge volatility. And if you're investing in these types of names, understand that the risk reward is very great with a lot of these types of names. This is what we would call a spec stock. I would also classify HIMS as a spec stock. And spec stocks, you should have very small percentage of your portfolio and very small positions within that. So if you have a $10,000, or let's say 100,000 sounds better when I do the math, $100,000 portfolio, you want $10,000 or less in specs. That's 10%. But then where people get it wrong, you need at least 10 stocks. That means 1% of your portfolio in each of those stocks or less. So preferably 10 to 20 stocks. A lot of people will go 30% spec and not even realize, to them, it's like, well, no, SoFi is not spec because now they're profitable and this and that. Well, you can identify it how you want, because here's the thing, it's subjective, but I personally would classify it as a spec stock. And so the problem is if you're super bullish on all these names and social media has influenced you to have a handful of just names like this as your portfolio, well, now you're convinced that HIMS and SoFi and Palantir and maybe even GameStop and AMC, that they're all high quality growth companies, not meme stocks, not spec stocks. And you build a portfolio out with all those names and you get crushed, and then you wonder why. And then you'll go on YouTube and, a lot of times blame the person that made a video on a spec stock 2 years ago that didn't work out. Being wrong, guys, is part of the equation, and especially on spec. If Peter Lynch is happy being right 6 out of 10 times and he's a value investor, if you're investing in non-value stocks, high risk stocks, hyper growth type stocks with high multiples, or spec stocks that are burning cash, meme stock category, things like that, do you think that you're going to have better results than Peter Lynch, who is a pro with hundreds of people working for him? So if he's happy being right 60% of the time on a value stock, what percentage of the time are you gonna be right on a meme stock or a spec stock? Think about that. You're probably gonna be wrong well over half the time. And so you'll do a video about like, hey, here are stocks that think are attractive to buy now. And it might be a spec stock and it might not work out. That's part of the equation. And the investing aliens, again, they understand stuff like that. It's part of the equation. It's part of doing business. The casual person on YouTube just doesn't get that and never will. And you won't convince them otherwise, because that's just social media. And I'm not trying to sound negative or cynical, guys. I'm just being 100% transparent. And hopefully that's what attracts you to this channel, is that I can just give some real talk and tell you what's on my mind, tell you how I feel. I literally had nothing going into this. You're asking me questions and I'm just telling you what comes to my head as I talk. Sometimes that gets me in trouble, but hey, it's being real nonetheless. So thoughts and prospects of investing in space is a new. So this is something that we talked about a couple of years back. We were talking about companies like Rocket Lab. We did a conference series the Q1 of 2023, and we've been talking about this for a while. Now there are a lot of different spec stocks, and Rocket Lab would also be a spec stock, probably also be considered a meme stock that would fit in this. This is a good question. It is a very speculative industry, and of course, you can't invest in SpaceX. So the one stock to me that sticks out is Rocket Lab. Personally, we were buying that stock at $4 a share, $4.50, some even in the threes, high threes. Would I buy it at $10, $11, $12? I wouldn't personally. I think I looked at it this morning. Price to sales multiple was pretty aggressive on it. In fact, let's just look together. Why not? We're hanging out. Let's just take a look at it and see what it's doing. So Rocket Lab is, let's see, Rocket Lab, RKLB is the ticker. So we've got valuation on this, and this is why I like just looking at this quick glance information here. So price to sales, Ford is a 13.81. You're not going to convince me that $12.67 is cheap for Rocket Lab. If you look at this stock, it was 347 52-week range, and now we're basically sitting at all-time highs. And the market cap on this thing's actually almost $6 billion too. Profitability not looking great. This is definitely that speculative meme type area. And the scary thing I think about that is there are a lot of other names that would even be more speculative with less future prospects maybe than a Rocket Lab. So we have a space channel in Discord, and if you're interested in learning more about that, that channel will open up a Pandora's box of this question. I can't even touch the surface of how much information you can get from that channel. So go check it out. And that channel is available to all tiers. Anybody in Discord has access to the space channel. Go check that out. Again, we have that free 7-day trial to Elite. Anybody that wants to try Discord, Patreon, just go to patreon.com/fired up wealth, 7 days free trial. You do have to enter your information, but if you decide it's not for you, you can cancel and you won't be charged a cent. I promise you, if you give it a try. If you look at our conversion rate on those trials, we're running really high. Last time I looked, it was somewhere around 70%, right? So that means that people out of every people that come, 3 of them, a little less than 3 of them are going to actually stay with us and stay for several months. And that's telling you, because a lot of times those free trials, you have very low conversion rate, like 20%. I've talked to another creator without mentioning names. His conversion rate was like 17% last time I talked to him. So that should speak volumes to you that people that try it actually say, hey, this is really good. I wasn't expecting this. A lot of people have this false kind of idea of what we're all about. And it's very different when you get in there. The community is really about a bunch of like-minded investors, successful people, and trying to be better as a team and learn from each other. It's not like Eric just on a soapbox talking down like I know everything. Nothing like that at all. We do live streams Monday, Wednesday, and Friday. Wednesday's chart day. Discord, we're in there, all the time. There's tons of activity. So YouTube, we're doing like 1 video a week. If you really want where the activity is, it's in our Discord, Patreon, and check it out. I'm not trying to oversell it. I'm trying to explain it because a lot of people just don't understand what it's all about. It's a community of like-minded investors, investing aliens. See, here's the thing, right? So Navitas, I have actually thumbs down to this. I'm not going to thumbs down you. I'll put a like on it. So sorry about that. I got another one here. Must have been in a bad mood that day. Here's the thing. The reason I have those thumbs down, it pisses me off because YouTube just doesn't understand the idea of a spec stock. If you're buying something like Navitas, literally it can go to zero. And we say it over and over again. For most people, they don't have the risk tolerance. Everybody thinks they're a 10 out of 10 because they want to get rich quick. But the reality is hardly anybody actually has a 10 out of 10 risk tolerance. Everybody thought they had a 10 out of 10 in 2021. They got their butts kicked, and then they realized they're more like a 5. So all 3 of these names they're spec stocks. Now, ACMR is a little bit higher quality, of course, because it has profitability to P ratio. It's got immense Chinese risk, right? So this is what makes it spec. But this one definitely sticks out from the other 2. And SoundHound AI and Navitas are those speculative type names that literally can be at 10x or they can go to 0. But people don't hear that part. They just hear that it could be 10x. You hear what you want to hear. Navitas, even at this point, can literally go to 0. That means if you put in $2,000, it can be worth $0. 0. If you don't like the sound of that, then do not touch those names. When I buy something like that, it's a small percentage of my portfolio, usually like 0.5%. And if it doesn't work out, no big deal. If it does work out and gives me a 10x, great. And it's within a basket with 10 or 20 different stocks that are hedging each other because over half of those spec stocks can be wrong. Again, if Lynch is right, if he's wrong 40% of the time on value stocks, you're probably wrong something like 3 out of 4 on spec. And I can tell you that until my face is blue on YouTube, but unfortunately, if you're fast forwarding, you're skipping through content, you're listening to X, a lot of this stuff doesn't get absorbed. You just don't hear it. All you see is, oh, this person talked about this stock, so he thinks it's going to go to the moon and it's 30% of his portfolio. Not true at all, right? So what's a goal or milestone that you like to hit by the end of the decade? As far as the channel, I mean, our goal is 100,000 for YouTube, which hopefully we'll get next year, well before 2030. My individual taxable brokerage, right now is sitting 2.3, 2.4 million. I wouldn't mind getting that, to $5 million over the next, whatever that is, 5-6 years. And that'll be tough to do, but it's definitely attainable. Thoughts on SMCI drop? The thing about SMCI too, you have questions about it. This is something in Discord where it said, hey, anybody that owns it needs to get out. The story changed, sell it. it's going to get a lot worse. And now today it's down another 25% after earnings. I mean, it's being in Discord, the information is real time. I can communicate that to you and it's there within a second. YouTube, we did this 7 days ago. So your question is a week old and now I'm doing the video and you're probably watching it a day later. The information is so stale that you get, and not just from my channel, from any channel. Discord is going to give you real time information, and that helps with decisions. Not because you're a trader, but because you're like, hey, if I own this, I want to get the hell out of it. Or if I'm thinking about bottom feeding, I'm going to avoid it with a 10-foot pole if I really understand it. Because Eric spent 3 hours in Discord breaking down all the reasons why you shouldn't touch it. Yet you don't have the information. You don't have the information. It could get delisted. There's just too much risk, and the reward is not there for that risk. But now I can tell you that now. I told Discord that a week ago when you asked the question. Now you're first hearing it on YouTube after it's down 50% since you posted this. Is AMD, Tesla, NVIDIA goodbye now? I always say, well, what's your blueprint say? And you get annoyed. Well, what's a blueprint? Well, watch the masterclass videos. You can learn what a blueprint is. Otherwise, I have no idea. Do I like the companies? Yeah, I own all three. They're top holdings in my portfolio. Is it a buy for you? I have no idea. I don't know anything about you. What's your risk tolerance? What are you trying to do? What's your blueprint? I don't know. But this is a YouTube type question, like which stock should I buy? Get rich quick. What's going up tomorrow? And a lot of it's trading. Retail, most of us are traders. Whether we want to all say that we're investors, but the majority is most of us that are in the retail space are not really investors. We think if we buy a stock today and it goes up, $10 tomorrow, it doubles tomorrow and you sell it, that was investing. That's not investing. It's trading. There's nothing wrong with it. I'm not trying to say that traders are bad or anything. I think it's just important to understand that it's like oil and water. And if you don't understand the two different things, your mind is confused. And so you're sitting there looking at your phone all day, staring at your portfolio, hoping it'll go higher. And you get confused and you have questions like, should I buy? Should I sell? If you have a blueprint, you already know the answer to this question and it simplifies your life. But like a lot of things in life, it's hard because you have to actually put in the time to plan before you actually do. So most of the time, what people do is they just buy a bunch of stocks. They don't plan out anything, build a blueprint, portfolio idea, design. They just buy a bunch of stocks, call it their portfolio, and then it causes a lot of stress because you're constantly worried about what to buy, what to sell. And that unfortunately is, probably 95%, especially if you say 35 and under, it's got to be 95% or maybe even higher that falls in that category. And that's fine. And people are going to say like, hey, there are a zillion millionaires in the world, and just because you did it one way, it doesn't mean I have to do it the same way. I get it. I would have said the same thing when I was 25. I had it all figured out too. I totally understand. I can relate to you. I'm just 20-year-old version of you. And I wish that I wouldn't have been so stubborn with a lot of things when I was younger. But, that's just the way it is. We have, I don't know, high testosterone or whatever it is. Do your thing, man. Do whatever works for you. I'm not here to tell you that you can't, go buy meme stocks and gamble money and do what you want. It's your money. I mean, do whatever you want. I'm just going to tell you my thoughts and you can take it for what it is. Love the analysis of stocks. I love comments like this, Brad, much more often than not. And maybe it's my personality. When I see that, it's like, well, sometimes he doesn't really agree and wants to point out that sometimes I don't agree with what the hell you're saying. Oh, that's fine. I mean, hopefully that's the case, right? We're not all sheep that just do things the exact same way. We have our own ideas and there's nothing wrong with that, but it is funny. I can read between the lines. Are you starting to think that tech stocks are getting a bit overvalued 6 days ago? Yeah, I've been trimming. I trimmed some more this morning. And you trim and it goes higher. That's okay. If you're up 500% on something and it's all house shares at this point and you trim a few shares and it goes higher, well, that's a high quality problem. I'm not stressing out. I don't sit there and woulda, coulda, shoulda all day. I shouldn't have bought this and I should have trimmed here and I should have bought more. That stuff's going to drive you insane. It's all the psychology. And we, again, going back to the masterclass, that's the kind of foundation that we give you guys with that. Is Navitas goodbye? I don't know. You tell me. Is it part of your blueprint? Do you understand what spec is? Is it going to go higher? Is it going to go lower? Well, if the story works out, it could be a 10x stock. If it doesn't, it's going to go zero. And then you have to figure out, is that, first of all, does that fit your risk profile? And then go do your own exploration of the company and see if you think it's going to make it through or not. What does it have? Four quarters of cash, and it's either going to have to raise cash or something else, right? To keep things going. So when a stock's not profitable, it's burning cash. There's a lot of risk there. And the story has deteriorated with some of these names. And that's just part of investing in spec. And once you get it, you're going to get it, but it's hard to get it, especially if you live in if you spend most of your day and you think that watching YouTube videos all day is due diligence, just think about that for a second. Just think about that for a second, right? Because most people that are doing YouTube videos are doing it for monetary gain. I don't do YouTube videos for monetary gain. I look at myself, I'm an investor who does YouTube videos on the side. I didn't make my money on YouTube. A lot of people make their money off of YouTube. I already had money and I'm doing this as something I enjoy doing because I'm really passionate about it. So it's different. And what I will tell you is that, I've never bought a stock in my life by just watching a YouTube video and saying, hey, I really like the stock. You got to at least do your own homework. I'm not saying you shouldn't watch YouTube videos. I'm saying if that's your only form of due diligence, you should think very hard and reconsider perhaps adding some additional outlets like going to those company investor relations page, reading 10Ks and 10Qs, listening to earnings reports. If you're not doing those things, just understand that you don't truly understand the companies you're buying. And so you're not going to have conviction when things go south. And this is where people panic and they if you don't have all this stuff figured out from a high level to say, what is a spec stock, first of all, and why would I even buy it? It's going to panic if you own it and if it's down 50%, you're like, oh my God, what do I do? It's like, hey, if it goes to zero, it goes to zero. Like that's part of the process. You're gonna be wrong sometimes. And if you don't like that, just avoid those spec stocks. And even if it's not, it could be something in the S&P 500. The SMCI is part of the S&P 500, and the thing loses 50% in 2 days. That should tell you right there you need diversification. People say, oh, Buffett only has 5 stocks and he's over concentrated. No, we can go down that rabbit hole, but we won't right now. Okay. So what is the reason AMD is lagging because of other AI? I don't understand what this question means. AMD was a buy at 55 and 65. And what is it trading at now? The thing has been a monster. It depends on when you bought it. That's the problem. It's up 295% the past 2. But if you bought it at this 58 level, it's you got almost like a 300% return in 2 years. So, this goes, and I'm not picking on you. I'm really not, but you're saying it's lagging. My guess is you bought it at 150 and you're down. Most people in Discord have, $65, $75 cost basis on the stock. So it's tough. I don't think is it a good buying opportunity? Well, it's more attractive under 150. When it got to 200, I trimmed, but it's still expensive. It's still actually overvalued at $143. And every week we do chart day. And when the stock was up here in the 200s, I was like, I would not touch this thing. Here's why. I show you trend lines. Could it go lower? It was 135 in August. My preference on this would be lower than 143. Could it find a footing and go higher from here? Yeah, because there's a lot of excitement about the future of the company, but it really hasn't been a laggard. It just depends on when you bought the stock. And that's part of the problem, it's only up 28% in the past year. But then, if you zoom back to these lower points, you're up big on the stock. And it's a tough one. It's been expensive this whole time. So basically the entire 2024, it's been overvalued. And at 143, I don't think it's like that amazing of a buy. It's showing a 128 PE ratio. I like the stock. I'm long on it. I'm just saying, I think perspective is good. It's not a cheap stock. That's all I'm saying. I like the long-term prospects of AMD. I own it long. Is it cheap? No. I like Palantir. I'm waiting till after earnings before buying more shares. Well, you're paying a higher price. My thoughts of Palantir, I actually trimmed a few shares before earnings and going to trim some more here at 55 or something like that. And people say, well, if you're a long-term investor, you just hold for, that's fine, guys. Like whatever you want to do. I'm getting towards that end game kind of preservation phase. If you're young and you're in the accumulation phase, I totally get it. But Watch chart day this morning and I give you some more insight on how, just another way to think about that a little bit, because in 2021 we said the same thing, like, oh, people like Upstart's $300, I'm not going to sell it because it's just going to go higher and higher. Well, you know how that story, panned out. There's a lot of names like that, and they get spec stocks. Spec stocks do that. Sometimes they give you a huge gain, sometimes they're big losers. It's part of the equation. If you understand how to build a portfolio, it's not going to hurt you that bad. But people get that twisted a lot. Um, I wish that you could just have a crystal ball to be like, here are 10 spec stocks that are all going to 10x. Everybody thinks that somebody on YouTube is going to be like some guru that can do that. Nobody can do that. They're full of it if they tell you they can do that. Like, oh, just these 5 stocks, buy these, put all your life savings in it, and you're going to be, a millionaire next week. Well, I'm going to say that to get a lot of views if I'm a YouTuber. But the reality is that YouTuber doesn't know a damn thing. They don't. No, Wall Street doesn't even know what the hell's going on half the time, guys. So don't be blinded by, just don't be blinded by this kind of stuff. But Palantir, I like the company. It's expensive here. It's definitely overvalued, but people are paying for that future premium. Now, some people are going to hear me say that, and they're buying it today over hand over fist, and they think it's going to be $1 trillion next year. That's fine. I own it. I'm a bull. We were the first YouTube channel to cover Palantir before anybody else. Been talking about this stock since 2019 when we started this YouTube channel. And yeah, it's you don't generally use the P ratio for something like this because it's SaaS, but you look at the EV/NTM revenue, it's in its own universe. There's nothing even like CrowdStrike and those stocks. It's not even close to it at $55. And it probably goes higher, but at a certain point, if you bought it at $6, $7, went to 53, I'm taking a few chips. Doesn't mean you have to liquidate it, but taking a few chips off the table to me makes sense. But hey, you don't have to agree. It's your money, right? What is your opinion on, let's see. So what is your opinion on Snowflake in comparison to Databricks? This is a rabbit hole, but long and short of it is that I'm still bullish on Snowflake and I own it. Out of the top 70% of my portfolio, it's the only red I have. So if you look at the majority of the money where it's in, like the higher concentration positions, and I share this stuff in Discord as well. Top channel actually breaks down top 25, 35 holdings I just did a couple days ago. Snowflake and Databricks do compete in certain areas, but they have their own niche. Both of them can do well longer term. And the thing with Snowflake, I've told people from day one that you probably should avoid Snowflake. If you buy it, it should be spec. And again, a lot of people they don't hear me when I say that and don't listen. Snowflake has been a laggard. I still think that 2030 time horizon, I think the stock can do well, but the story has deteriorated over the past, couple of, I don't know, a couple of quarters even, especially with Slootman resigning and things like that. Um, there are some there's some truth to this, right? So there are certain customers where Databricks is going to be a better fit, and I would say there are certain customers where Snowflake's going to be a better fit. There's a lot of talk about this. I think it is a little bit misunderstood and overblown, but there is some truth to it, right? And they are very different. I think when you think of the customers they're going after, and so to me, I think both of these companies can exist and do well over a longer term, but Snowflake has to address issues like stock-based compensation. When this stock was something like $200, 185 or something earlier this year, I told Discord and I did a patron exclusive and said, if you pay anything, I think Snowflake is worth $100 to $125 a share. And if you pay anything over that, you're paying a premium. And this was when it was like $185 a share, and people are like, it's not gonna go down that low, $100 a share. And I mean, if you look at it, it got right down into that level. What's the 52-week low on Snowflake? It got down to $107. Now it's 119. I still think I'm gonna make money on Snowflake over 2030 was my horizon, but I could be wrong. If Lynch is wrong 40% and happy on value stocks, if I'm buying Snowflake that's burning cash, stock-based compensation is ridiculous. There's a million reasons, especially if you're a value investor, to hate Snowflake, right? Most people should not touch that stock. And if you do, it should be spec. And I've said it 1,000 times and I'll keep saying it because, sometimes it's not always heard. Any thoughts on ELV? I don't know it. I'm just being honest. Any thoughts on high tide? I sold it before the election. I had it as a spec stock. It's a small penny stock type thing. I don't remember what I sold it at, around $3. So, I mean, they're getting hit today because of the election news, but this is another one. This is, $298 million Canadian market cap. This is spec. If you buy something like this, understand that literally you could get a 5 or 10x, or this thing could go to zero. That's what spec is. And so if you can identify what spec is and then make sure it's a small part of your portfolio, it's going to avoid a lot of problems. It's going to make your life easier. Thoughts on best long-term investment in 10, 20 years? You gotta love questions like that, right? Just buy the S&P 500, the VU. If you want something you know, that I could answer that question without knowing anything else, I mean, probably S&P 500, you know, QQQ for the right individual. Why do you consider gross margin for most of your analysis? This is again where YouTube gets they get things very wrong, because it's easy to make assumptions because you're watching a 10-minute video and think, oh, well, this person, talked about this stock for 2 minutes and that's all the person did. I might put in 100 hours or hundreds of hours into a stock before I buy it. And so if I'm looking at something like gross margin, this is quick analysis. That's something to easily look at. The reason I'm asking, we're not missing, yes, you could look at all these. So the response to this is just one of many tools used. You're referring to quick glance metrics on YouTube, which barely scratches the surface. Do you want to Discord for me to understand what I mean? Or just listen to this video, because I'm telling you, there's just a ton of stuff that goes on when you buy a stock. It's not just watching a YouTube video or a TikTok, or just looking, just come on here and be like, oh, profitability, gross profit margin 25%, but the gross 40%, and the valuation's this. Oh, it's a buy. Yeah, that's not how you buy a stock. I think people literally do that, but I'm telling you, that's not how you should buy a stock. There are a ton of steps. The masterclass video does all I can to take 25 years of investing experience to say, if I could go back in time and teach my 20-year-old self what to do and what not to do, here's a series of videos that will help me understand better. And that's what it does. And it's a great value because it's a monthly plan. You don't have to pay a big number up front, and it's going to help you be a better investor and avoid a lot of pitfalls. You're still going to make mistakes, and you're still going to, if there are 100 pitfalls, you're still going to fall in 90 of them. But I'm going to help you avoid 10 of them. It's going to fast track that success for you. SMCI, please. Same kind of deal, man. This is, if you want to, if you want to be in the know, you got to be in our Discord. Check out patreon.com/fired up wealth. That's the Q&A session. I don't know how long this is going to end up being. It looks like I've been on the mic for a little while, but hopefully this is helpful, guys. If you're new here, subscribe to the channel. If this video is helpful, if you want more content like this, drop me a comment. Let me know. Probably most of you aren't watching at this point, but you never know. Maybe a few of you are. So drop a like, drop a comment. Have a great rest of your day. See ya.